Welcome to today's session 3.2 Budgeting and Financial Management. My name is Tara Longo. I ran a bricks and mortar business, an organic butcher shop in Eglinton Avenue in the city of Toronto for 14 years. My background is in finance, so after selling my business, I've been helping entrepreneurs with their businesses, and finances always seem to need a lot of help. Finances tend to be pushed aside until there is a problem. So let's talk today about some steps to ensure your financials go smoothly for you. There are 3 steps needed to have good financial records. And the first step is that you need to realize as an entrepreneur that financials are hard, but they really are the drivers of your business, and all your decisions revolve around the finances. Having great financials will help you make the best decisions you can, like, can I afford this? Where is the best area of growth? And how much will I make if I do this? If you aren't good at doing your finances, it is time to pay someone to do them for you. You should have a list of things you would like to see on a monthly basis. For example, a profit and loss statement, cash flow statement, and daily sales reports. These are instrumental reports in helping you make the right decisions, and each report provides you with different insights. So you as an entrepreneur need to know what you want, what data you want, and you need to get the reports to help you. So step 1 is to get good financials. The second step is to plan for good software. And depending on what you are using, there are seamless ways to make your day-to-day accounting and your software connect and make sense. Whatever you do, you need simplicity. The more manual processes you have, the more difficult it will be. So make it easy and efficient and get your numbers, whether it's by changing your software or your POS systems, and do what you need to do software-wise to make things work. The third step is to review financials regularly and see how your business is progressing. Now, this review is totally dependent on each unique business. For example, I used my daily sales reports to help me figure out how much staff I needed. Fridays tended to be a busy day, so we would add more staff on as if it was a Saturday or a Sunday. But without those daily sales reports and looking at the numbers, I would never have guessed that Fridays were busier on a per hour basis than any other day. If you took Sunday sales and you divided it by the hour as well, it was almost twice as busy as any of the other days, requiring more staff. These changes are just examples of the ways that numbers can be used to help you make the best decisions in your business. Without those daily reports, I would never have known what days were the busiest. So the 3 starting steps to financials are to get good finances, make software seamless, and number 3, review. Let's talk about the income statement specifically now, which is probably the most useful document for a business owner. This document should easily be obtained from your accounting software and should be reviewed at least monthly. It's important to note that all financial statements are backwards looking, meaning they do provide knowledge of what has happened, which should allow you to make decisions going forward if you use them correctly. Once you have some regular numbers and history to your financials, you should be looking at these numbers, comparing them month to month. Now, this is really important because no numbers should be looked at without comparing them to previous months, as that's when you can see what's going up or what's going down, and you can make sense of things to see if they're going in the right direction. So take your current month and add on 2 or 3 other months and compare them. Why is this trending upwards? Why is this trending lowards? What did I change? Did I gain some efficiency? Did something improve? What is the goal here with these numbers? Another column to add to your income statement is a target column. Now, this is a bit of a hack I used to do to my financials, and it's something I found very useful. And to explain, I would add a target column to the end of my financials. So your sales would be 100%, and then you'd have a line-by-line item as to how much you wanted each thing to be. So labor, I would want it to be 17%. Rent, 2%. Marketing, 3%, and so on. And you'd have to go back and take a look at those month over month and see if you were up or down. As for some other things to pull off the income statement, there are some general rules of thumb for most bricks and mortar businesses. The first is that only 10% of your sales should go to rent and occupancy costs. And what I mean by that is rent plus utilities, plus repairs to your space should be less than 10% of sales. If they aren't, then you're either paying too much for your space, or number two, your sales aren't yet high enough to justify the space that you're in. In any case, something will need to change to get you in line with this number. The other rule that I look at is marketing and advertising expenses. And they used to say back in the day that bricks and mortar would spend 2% of their sales for advertising. So if you sold $100,000 a year, then $2,000 at a minimum would be your advertising expense. But with online marketing and advertising, there isn't really a set rule anymore for this category. So although some of these rules are great, each business is unique and needs to look at these numbers through their own lens. They are simply good starting points for you and good numbers to keep in mind when you do your analysis. Let's talk margins and gross profit now, as they are so important that they also require some focus from every entrepreneur. Gross profit is simply revenue minus cost of goods sold. Now, some investors and lenders care more about gross profit than they do revenue, because it really shows how much cushion the company has left to cover the other expenses. Following gross profit, if we divide it by revenue, then we have gross margin. It is calculated by this formula: retail price minus cost of the product divided by the retail price is gross margin. Now, margins range across the board and across a variety of industries. For retailers, it's around 42% average. And for service businesses, it ranges anywhere between 40 and 60%. And again, these are only examples to work from. But if you were a service business, you would calculate your service costs in the same way. For example, if you own a hair salon, you know it takes 25 minutes for a cut, including check-in and cash out. So at $40 an hour for staff, at 25 minutes, it costs you $17 in labor, plus other employee costs like taxes and the hair care products that are used. So it would cost you like $20. If you're pricing your haircut at $25, that means you only have $5 left to cover the rest of the expenses. I'm not quite sure if that sounds like enough. So finally, make sure you have these costs and these profits in your head, these pure margin calculations. You need to know precisely how much things cost and how much you're selling them for, and the margin you get with each product sale. Knowing this will allow you to make quick decisions on discounts and bonuses that you can offer customers. Beyond this initial margin analysis, make sure you continue to review. Again, margins and knowledge are great, but if your inputs change, the cost of the products or your labor, then your prices absolutely need to change to make sure that profitability doesn't decrease. Let's talk about a 10-cent increase in the price of beef that we experienced. You think 10 cents, not a big deal, but 10 cents was on the 10 cents for the whole animal. And that really equivocated to 30 cents per pound on the finished pound of beef. So if we just let that 10 cents go and didn't increase our prices, we would have been losing 30 cents per pound on every pound of beef that we sold. This is why I say that knowing your margins, your costing, and your pricing are so important that you can address these issues before they get out of hand. The next thing to focus on is, once you get some financial records, is you need a budget. Now, budgets can be very simple or very complicated depending on your business needs and your growth plan. And as I mentioned earlier, putting some target columns into your income statement can be helpful going forward. And to be honest, as a small business, budgeting is probably not as crucial or important, simply because you as the entrepreneur are managing all aspects of the business, and I feel like you should know what is going on. That being said, I always tell people to have a plan for 3, 6, 9, and 12 months, and a plan of how you want to get there. Do you have enough cash to do everything you want to do? How do you save your money to do it? And these can be short written notes to yourself, or you can write them in on your financial statements, but just continually review and take a look at them and hold yourself accountable to these goals. For budgeting, you should focus on the projects that have the biggest effect on your bottom line and profitability. And most often they are not the funnest projects. So for example, updating pricing or shipping costs, as I mentioned, tend to be boring, but they could have the biggest effect on the profitability of your business. The last part of our discussion today is on cash flow. And honestly, cash can make or break a company. How do you make decisions if you don't know how much cash you have? How do you make purchases for 6 months from now if you don't know if you have the funds to pay for it? Business suffers when cash is a daily concern. So my advice to you is you cannot manage your company from your bank balance. And a perfect simple example of this is, let's assume you have $10,000 in your bank account, but you have checks outstanding for $15,000. When they're cashed, you're in the negative. How do you manage this? Cash is always important, and it doesn't change the bigger you get. It just becomes more amplified. We started having cash issues in year 3 when we opened 2 locations, and it was very stressful. But that wasn't until many years later. So some additional things to remember in terms of cash. Cash is not the amount on your bank statement. Like I mentioned, you may have receivables and payables that haven't been processed. Things like principal payments and capital expenditures also don't show up on your income statement, and sometimes you forget about them. So you would be paying cash out to cover your principal payments, but they're not going through on your income statement. So again, looking at these things collectively will give you a better idea of how much cash you have on hand. And this is why cash is so important. When I told you before to pick some reports and focus on some that are crucial to you, cash flow might just be one of these reports that you want regularly on a weekly basis or a monthly basis. And there are lots of cash flow templates online. So please try your hand at creating one and have it make sense. It might take a few months to work out the kinks in your cash flow document, but can be a very useful document to your business. So to sum up today's session, financials are so important to running a business. And sometimes they get pushed aside, but don't let that be you. Take control of your finances and use them to your advantage to build a stronger, more profitable business. Good luck.